Hey guys, Sports from BK Force. Welcome to our weekly technicals for 223, 228 of 2014. Yearly highs. Well, it's the big question of the day. Before we talk about that, let's just read our disclaimer. Trading Forex margin carries a high level risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all that associated with trading on margin. Well, the reason I bring up the issue of yearly highs is because as you look around at everything that's going on here, we're creeping and crawling in all sorts of directions, both up and down, to some critical yearly levels. The euro, of course, has this spike out high at above 38.50, but really it's the 38 level, which has been the resist level here, that it's coming close to. And a move through 38 definitely puts the spike highs at 39 in play. And of course, even then, it's going to spur the talk of a possible run towards the 140. So we're very, very close, and the question is whether we're going to muster enough energy here to move through this resist, or whether this is just going to be yet another channel high, and then we start drifting off back down. The back down support, initial support here is obviously 36.50, but the really longer term support is at 35.50 and 35. Those are the key channel supports as we go up and down. For now, having spent 1, 2, 3, 4 days trying to climb through the 37.50, we need some kind of a catalyst to really drive us higher. And barring that catalyst, it's going to be difficult to foresee how the euro can really sort of run on momentum. Momentum is actually waning, and the longer we wait, the likelier we are to start fizzling back down towards the 36.50, 3600s as we go along. Now, cable finds itself sort of in a similar situation where we did make the yearly highs this year, actually. This week, but then kind of flamed out, and flamed out today very, very badly. We had a nice strong run, and then all of the London fix numbers for the Vodafone came in, and cable just got slaughtered to the downside. Still 66 is the key support, and then beyond that is the 65. Those are the breakout levels. But if we take a look at the week, it's just been actually a very, very ugly week technically. And having rejected the 67 so hard, it's going to take a long and serious amount of upside work in order for us to really create a much more positive technical structure. Basically, a break below 66 now just invites much deeper liquidation towards the 65 level for cable for the near term. When you're looking at dollar yen, though, the picture is quite different. There is no yearly highs. There's nothing here in view that's immediate. But what is relatively supportive of dollar yen is the fact that we've made higher lows continuously here. We've held above the 101.50 level, which has been a big support level. And we are on the cusp here, this 102.50. Basically, really on the cusp if you... sorry, let me just get back to the current data. We're really on the cusp of the breakout at 103. The 103 becomes the really, really critical level. We can take that out. That puts us in a much stronger position for potentially a run back out towards the 105 highs. So yen looks much more constructive technically on a longer term basis. Aussie died a very quick and painful death in this 90-91 level. That was a big resist level from the beginning of the year, and we just couldn't get past it, and now are sort of just channeling. The only thing I think that's sort of relatively positive for Aussie is that we're holding above 89. A break below 89 would pretty much confirm this is a channel top, and then we're looking back down to test the 87 support. But the fact that we're kind of holding above here suggests there's a modicum of congestion. But really, Aussie is just not a play until and unless it either breaks 89 to the downside or 91 to the top side, because it's consolidation for the pair for the most part. What was really interesting this week was this run by dollar CAD. Oops, let me get to dollar CAD. Here's dollar CAD. That just basically flamed out at the 112 level today. But the question is it over or not? The big run in dollar CAD was really driven by the idea that the BOC is going to have to start lowering rates given the very, very severe slowdown in the Canadian economy. And the severe slowdown is definitely there. Retail sales were horrible today. But what took the market off kilter was the fact that CPI numbers were hotter than expected, perhaps pushing the Bank of Canada to hold off on any kind of a loosening cycle. So there's a tug of war here between those that are viewing the inflation numbers as enough to keep the BOC at bay, and the CAD bears, who basically view inevitable that rates are going down, given the fact that Canadian economic situation is just kind of very ugly. The fact that we failed the 112 is a note of caution, and the trade in dollar CAD now on the near term really is basically a short until and unless you take out the 112s. So a break above 112s would definitely crush the will of the shorts, and you could have a much stronger and higher push, perhaps down to all the way up to 114, 115 level. But for now, the sort of 112.25 operating level seems to be the top for now. And of course, the shorts, having gained the power today by turning the price action around, are going to try and press the 111 stops and perhaps even test all the way down to 110. 110 is the key support level here that I think remains relatively solid for the time being. So in the very, very near term, it's a press to the downside, but a flip above the 112s really puts the pressure on dollar CAD once again, and puts it all the way to the upside. The crosses kind of look all over the place, and of course they're reflecting the I think the schizophrenic nature of what's happening. The CAD crosses certainly look, pound CAD certainly looked like it definitely topped out today with the weakness in the pound and the return in dollar CAD. And until we come back up above 87, it sort of becomes a sell rather than a buy at this point, certainly technically. And it may, it's kind of actually interesting. It's a relatively low risk trade here to kind of get short, because you know where the tops are. You know that any kind of a retrace rally is going to invite further sellers just because of this turn in the action. So a liquidation move here that could accelerate, especially if pound begins to accelerate to the downside, could certainly create further potential. It's a question of catalyst at this point. We don't have too much data on the Canadian side next week. We don't have too much data on the UK side next week. So we'll have to see if the price action alone is going to be able to push us to the downside. What we do have some data is on the European side, and I think what's interesting on the Europe side that is just kind of completely been ignored by the wayside, mainly because it's a very dead pair and nobody really looking at it as a trade, is Euro Swiss. But if you look at Euro Swiss here, it's been challenging this 122 level. Now 122 has been, let me just go actually even much further. Let's go to 3 years. You can really see how 122 has been just a very key support level. Let me just get rid of this. And definitely the 120, 150 is a key support level. But we have IFO coming up on Monday. German data certainly not been that great. And still a lot of EM concerns with Ukraine in the air. It really opens up the run, not a very big run, but certainly a small run potential here for a test of 2150. Now, of course, there's a massive floor at 120, and I doubt that Euro Swiss will even come close to challenging it. But the fact that we've just had this drip down distribution all the way down, kind of a stealth sell-off, should definitely give some traders note. And create a potential here possibly for extension. Not much, but for extension down to 2150 and perhaps even lower, as the technical picture certainly points a much more negative construct as we go along. So that's kind of how the week shapes up. We ended the week effectively flaming out at the yearly highs for the pound, kind of dying out for the euro. And next week is really going to be a question of whether we can remount those rallies, or whether we're going to have some pretty serious liquidation in those pairs as profit taking begins to take in earnest. Wishing you guys the best of luck, the best of trading. Boris Schlossberg over and out.